our 32nd anniversary in Red Deer. So we went from a prairie firm when I first joined 26 years ago to now across country. We have offices from Vancouver Island to Halifax and everywhere in between. So yeah, we're part and parcel with this epidemic across the country as well.
Perfect. Thanks, Graham. And as we can get into the presentation here, we'll say that we kind of Reg began with it by talking about how we're in this sort of unprecedented time, and most of these webinars tend to start with this concept of unprecedented. I wanted to provide a little bit of background as to what we mean when we say unprecedented, to just give you a sense as you kind of set the table for what the response has been and maybe why it's been approached in certain ways. So, I guess the first thing is we're actually dealing with two distinct crises, and actually now three, as Reg described. You have the economic fallout of the public health measures that have been put into place because of COVID-19. And then you have the collapse in oil prices, which was caused by a massive collapse in demand with a drastic oversupply. And that will have some profound implications for Alberta, and we'll talk about that in a second. But the third thing that governments are all trying to manage right now as well is that we're also going into what's our traditional natural disaster season, our fire and flood season. And for those of you that may be connected with folks in Fort McMurray, they've had thousands of people evacuated because of the flooding in that community. Fort Vermilion has had their worst flood along that river that they've had since the 30s. And that's going to be something else that governments are trying to grapple with. How do we do all of these things and deal with all these things at the same time? To put some numbers to it, again, for context, and there's all sorts of different statistics that you can use to describe it. One of the standouts for me is that with the Canada Emergency Response Benefit, which we'll talk about in a second, there were 7.2 million applications, unique applications for the CERB benefit. That is, for context, there's only 19 million Canadians in the workforce in February of this year. So, 37%, give or take, of the entire workforce is looking for this benefit. That's not to say they'll all qualify. There's, whatever, some of that'll shake out in the wash, but it does give you a pretty stark picture that in March we saw the largest single month employment decline in Canadian history, and we haven't even got the April numbers yet. Further to that, there's significant GDP decline that other folks have spoken to, and the Conference Board of Canada earlier in the month estimated that we were going to see a nationwide 25% annualized GDP decline in growth. And then we've also seen that the interconnectedness of the entire economy and the impacts of it, and that has also led to we've yet to have a challenge in our history, certainly in our living history, outside of the world wars, that has been so all-encompassing. There is no industry or sector that has not been impacted, and that has some implications for how these programs have been rolled out. A great example of that is that the decline in demand for fast food has had a significant impact on potato production and processing, because something like 2/3 or more than that of the country's French fries there's potatoes are produced for French fries for quick service restaurants. So at one point, the federal minister of finance actually in a Senate committee meeting kind of threw up his hands and said, everybody has a problem. So that's one of the things that the government is trying to navigate, all levels of government are trying to navigate. The next is this unknown timelines. Nobody's really sure what this is going to look like and how long it's going to last. It's not a great analogy, but it's the best analogy I have right now is if you were to think of this as a car crash, we're still we're maybe moving from the ambulance into the emergency room. We are not in the recovery phase yet. That to say, there's still a lot of conversation and there's a lot of eyes on what recovery will look like, but we're still trying to even triage the damage. So when it comes to government programs, a lot of them need to be understood in the context of they are emergency programs. They are not necessarily the programs that will see us through to the light to the end of the tunnel. And which leads into the third part of, we've seen somewhere in the realm of, depends on how you estimate it, 150 to 200 billion dollars in measures from governments announced from coast to coast to coast in over 300 different types of programs or measures. Again, for context, $200 billion, if you were to take the entire Canadian World War II production effort, adjusted for inflation, add that to what our response was in 2009 to the financial crisis, you would get to about $145 billion. And that was over the span of years. We spent that, or at least committed that, to get effectively from, I'm going to say, St. Patrick's Day to May long weekend, maybe even to Canada Day if we're being really ambitious. So it's absolutely staggering what has been done and how significant it is. Now, to that end, we'll highlight some of the key programs that have been announced, and then Graham and others will be able to get into a bit more specifically about how you as a business can access this and things to think about. But just at a high level, and these are again just the federal programs, I just wanted to run through quickly and provide a summary about them. So you've got the Canada Emergency Wage Subsidy, the CEWS program or CEWS program, depending on who you hear talk. That's the 75% wage subsidy program, which is a bit of a misnomer because it's 75% of the first 58,000 of eligible salaries or eligible wages. That program has been rolled out this week. As of yesterday, there was somewhere in the realm of 40,000 applications. That number is expected to increase significantly even by the end of the week. And all of those applications are going to be batch processed, and the payment should be delivered relatively quickly, given that they've assigned somewhere in the realm, I think it's 3,500 CRA staff to manually review anything that the automated system kicks over to them, whether it's over a certain threshold or there's something that doesn't quite line up. The temporary wage subsidy is the 10% wage subsidy program. That was actually one of the first programs that was announced. That program is about the withholding of your payroll remittances. And as people have been applying for the emergency wage subsidy, the integration of those two programs has become a bit clearer as to what the government expected, that they perhaps maybe hadn't communicated quite in the same way at the front end, but we'll be able to speak to that shortly, that those two programs actually do kind of work together. The next is the Federal Work-Share Program, which is a program that's been around for a long time, but has been expanded. This is for businesses that can put their workforce into work-share groups, and that have seen an eligible drop in hours. The work-share program has some specific benefits, and if you qualify, it's one that we definitely encourage you to look into, given that it's one that actually doesn't get a ton of press relative to the other ones because it's pretty complicated. The Canada Emergency Business Account is the $40,000 loan program that you've likely heard discussed, where up to 25% of that loan, up to $10,000, is actually forgivable, and it's interest-free until December of 2022. This program was recently expanded to include payrolls, companies with payrolls between $20,000 and $1.5 million. Initially, it was more restricted than that. The other thing that's changed, it was a kind of a technical change, but an important one nonetheless, for those of you that might be doing business on reserve or might have non-taxable payroll as part of that, that is now considered as part of the total payroll. It wasn't in the original applications, which was just more of we were told more of an oversight than anything else. The next is the Business Credit Availability Program, which is the suite of programs through BDC and EDC to provide working capital. And again, Graham will speak more to that about what those will look like and what you need to do as a business to apply for them. But again, I would stress that the CEBA program, the BCAP program, all these ones we've discussed so far and we'll discuss are emergency measures. They're not necessarily meant to get you through until into next year or what have you. They might adjust to become that, but in the meantime, they're really about emergent challenges. The Canada Emergency Response Benefit is the $2,000 a month program that you've likely heard about. There's been 7 million Canadians that have applied for it. This is for folks over the age of 15 years old who have earned less than $1,000 or have been laid off because of COVID, and to be eligible for $2,000 a month. And it's a pretty slick application process. One note on that is important for lots of businesses: you have to have been laid off to qualify for CERB, or you can't have quit your job to get CERB. And there's a lot of conversation that we hear from some retailers, maybe some food services places, and other types of businesses where employees might rightly see CERB as being potentially lucrative versus coming into work. That needs to be noted, that if somebody no-shows on their work, that's something that will be figured out afterwards at tax time next year, and that their record of employment should demonstrate that. Again, the summary point is you can't quit your job to get on CERB. And lastly, or not lastly, and there's a lot more, but the last one we'll touch on specifically here is the Canada Emergency Commercial Real Estate or Commercial Rental Assistance Program. There's just been, as of this morning, not even sure when exactly, the Canada Mortgage Housing Corporation has updated an FAQ on their website with slightly more information about what types of businesses will be eligible. And essentially, it's to back-end fund property owners or landlords that enter into rent reduction agreements for April, May, and June of 2020, obviously. They have to have claimed that or they have to demonstrate that the rent will be reduced by 75%. And then the federal government will pick up a 50% share of it. The landlord is essentially expected to eat 25% of that, and then the tenant will cover the remaining 25%. Like these programs have all been, the rental assistance program is no different. You see this process that the government's been taking, where they announce a program, give you a very high-level announcement, and then they essentially crowdsource the policy feedback. And this is where chambers of commerce, industry associations, MNP's been involved in a number of different discussions. So have your banks and others, to try and gather this massive amount of feedback, funnel it up quickly, and be able to have this almost a two-way dialogue, but it's not quite two-way, where the government announces something, adjusts it, announces it a week later, and then 3 weeks later you have the program actually rolled out. I would say, as much as this is an uncomfortable and sometimes frustrating experience for people, it has actually served to be a reasonably effective policy development model. And I would encourage you to keep engaging with the chambers of commerce and your industry associations, because they have had lots of impacts on the provincial and federal level for sure. So that's kind of where I'll leave it at the high level. There's certainly, like I said, there's somewhere in the realm of 300 programs across the country, so it is hard to get into the specifics of everything, but these are the kind of the big catch-alls, and Graham will speak to a bit more.
Sure. Thanks, Stephen. Just to check to make sure you can see the slides as I'm advancing them.
Yeah.
Okay. So first and foremost, the first announcements that came out in and around March 17th, St. Patrick's Day, were really designed to shore up the cash available to businesses. So there was a recognition that this, full stop on the economy was going to have a serious detrimental effect on cash flow for all businesses in the country. So first things that were announced were deferral of requirement to pay taxes. So deferral of corporate and personal tax installment payments that became due after March 18th and before, in a lot of cases, June 30th. Those payments will be deferred until September 1st, 2020. GST remittances were also deferred. So that's where you've collected GST and you have a GST return showing you owe funds. You don't have to remit on those until June 30th. You can also, as a cash management technique that's always been available, but certainly with our consultation with the Department of Finance and the government, for corporations that have made their monthly installments on the assumption that 2020 tax year was going to be similar to 2019, there's certainly the ability to go back to the government and say, 2020, we're not going to have the profit that we had in 2019, and we'd like to have our installments refunded to us, and there is a program for that. The CRA has further stated if you have a GST return with a refund or any other expected refund, to ensure that you electronically file those documents, because the closure of the CRA offices, the tax centers, electronically filed documents would expedite the receipt of the refunds. And that statement would also go for personal tax refunds as well. Unique and I guess notable, there were no changes announced to payroll remittance deadlines as far as payroll goes. If your employees are still on payroll, you're still obligated to remit on your regular payroll date, typically the 15th of the month following. Although both the temporary wage subsidy, TWS program, and the emergency wage subsidy programs have an implication on your payroll remittances. And again, these federal programs were designed to manage available cash. Similarly, Alberta also announced a number of specific programs. One of those matching the federal program was a deferral of the corporate tax installment payments. August 31st is the deadline for Alberta versus September 1st federally. They also announced a utility payment deferral for farms and small commercial users, and by small, the test was less than 250,000 kilowatt hours of electricity, or less than 2,500 gigajoules of gas. The announced increase to educational property taxes that came in the 2020 budget, which was passed just before all of this happened, that tax increase was frozen and not put forth, so that reduced the amount of property taxes that people were going to pay in the 2020 year. Workers' compensation premiums are deferred now until 2021, and the ATB was tasked with providing relief programs both to existing clients and also, as an outreach to facilitate some assistance with lending for non-clients, where there's some unique concerns in Alberta, as Stephen mentioned, with the oil and gas sector, basically falling on hard times even before this happened, and certainly it being exacerbated by the economy. And again, these programs, the goal for business is to preserve the available cash in the system. Tax filing deadlines have all been changed, and I won't go through these all in great detail, but personal tax deadline, which would have otherwise been tomorrow, is now June 1st. T3 return deadline, which would have been March 30th, is now Friday of this week. A bunch of other forms that are required to be filed, D5013s or partnership information returns, are now due tomorrow as well. I mentioned the balance due date changes, September 1st for most federal payments. The installment relief, that's only current year installments. If you as a individual had not made your 2019 installments, there is no relief, and in fact, interest will continue to accrue if you don't make that payment by the due date, which is actually April 30th. So you best check your tax return to make sure you don't have an installment liability from last year. Talking about the Canadian Emergency Wage Subsidy, this program was sort of when Stephen talks about the jobs or the outsourcing and development of program by discussion, this is the second wage subsidy program. The first subsidy was the temporary wage subsidy program, which we call the 10% program. And when this program, the 10% program, was announced and legislation was produced, there was a lot of input from chambers of commerce, from industry associations, from professional firms such as ours, which really were saying, that 10% subsidy is really not going to do a lot to incentivize employers to keep employees on the payroll. And a lot of comparison was drawn to Australia and New Zealand's programs, and some in countries in Europe where the subsidy for wages was upwards to 75%. Well, lo and behold, after this feedback, the Canadian Emergency Wage Subsidy Program was announced. And as you can see the title of the slide, it's a $73 billion program. This is a huge amount of government expenditure. When you consider that the federal deficit, which was projected for 2020, was in the neighborhood of 20 billion. This is, in excess of 3 times as large as our existing deficit, and is now going to add on to the deficit when we come out of this. So I'm going to go into some of the details because this is such a big program and is particularly important to businesses. So it is 75% on wages for currently 3 months, with a maximum subsidy of $10,000 per employee. And the businesses that are eligible for this, as I'll get into in a minute, are pretty extensive. So this could be all the way across the country. And it really was put in place to prevent further job losses. As Stephen mentioned, the 7 million people that applied for CERB, which would otherwise mean that there were 7 million people who all of a sudden did not have a job. And it was also designed to incentivize rehiring by employers of laid off workers, with the thought process that, when we come out of this at the other end, the employees will still be tied to their employers, and business activity will have a quicker pace to resume to normalcy. There is a limit on how much the subsidy is going to pay, and that limit is 58,700 of wages. So the 847 weekly per employee. If you multiply that by 12 weeks, you get roughly the 10,000 I was talking about. It's slightly more than 10,000. And there's a concept called pre-crisis wages, or we're talking about it in terms of, the definition keeps changing, but it's essentially the wages are 58,000 pre-crisis. If you bring employees back at a reduced wage, this subsidy could in fact enable an employer to pay their entire employee's wage if they came back at a reduced wage during the crisis period. The program is currently in effect for a 12-week period, which is broken up into 3 blocks, and it's retroactive, starting effective March 15th, and is going to carry forward to June 6th of 2020. Now, the legislation does contain ability for a possible extension of this program, and the intent, of course, is if we don't get to some sense of normalcy by the first week in June, you could expect that there is an extension of the program. The percentage may not be the same, because the legislation has built-in flexibility as to whether it's 75%, or maybe after June 6th it goes to 50%. So there's potential changes going forward. Lots of criteria has to be met for this program. This is a big expenditure item, but the government certainly wants to make sure that it's not throwing money out the door. So you have to meet a number of tests that are defined. You have to have an eligible employee. You must be an eligible entity. You have to have qualifying revenue, and then demonstrate a qualifying revenue reduction. There's qualifying periods, which are the 12-week period we're talking about. And it's only in light of eligible remuneration. So you have to be paying the right kind of funds to an employee. And the legislation, which is Bill C-14, is very complex, and there's a number of penalty provisions that I will talk about. It's amazing how quickly the government has come together with what is a very massive program. So the Department of Finance certainly has been working overtime on this program. So who is eligible? Well, firstly, it's an eligible employee, and the test is done on a week-by-week basis. And there is some confusion and complexity in applying for this program, because everything is based on payment per week. Some employers pay bi-weekly, some employers pay monthly. So there's adjustments that need to be made in order to calculate properly what the subsidy is. So it's an eligible employee who receives remuneration in respect of a week, and they're employed in Canada. They're employed by an eligible entity, and someone is not eligible if they've not been remunerated for 14 consecutive days in the eligibility period, so in the block of 4 weeks. So the reason for that exclusion is they would otherwise qualify for CERB. And we'll get into some more interplay between CERB and the Canadian Emergency Wage Subsidy in a second, but the intention is that the subsidy is in place so that people don't go on the CERB. So who is an eligible employer? So individuals who are self-employed and have employees, trusts who have employees, certainly taxable corporations or not-for-profits, registered charities, labor organizations, agricultural cooperatives and organizations, chambers of commerce, boards of trade, nonprofit corporations that are set up for SR&AD purposes, which is scientific research, experimental development, and partnerships if all of the members of the partnership would otherwise be eligible employers. So who's not eligible? Well, public institutions, so schools, school boards, hospitals, health authorities, and government-funded post-secondary institutions, universities, colleges. Municipalities and municipal corporations are not eligible, or our First Nations, Crown corporations are not eligible. Canadian amateur athletic associations, and companies that are otherwise exempt from tax, other than all of these are provisions in the Income Tax Act, which actually circle back to be boards of trade or not-for-profits. Also, partnerships having a First Nation partner or a non-taxable First Nation corporation are not eligible employers. The calculation of this program is very, very complex. In my 30-plus year history of doing tax, I've never seen the government prepare an Excel spreadsheet that shows you how to calculate this program eligibility. And the spreadsheet, which is available on the Government of Canada, the CRA website, is very well laid out and is really a must if you're applying for this program. But you know, the joy of the Tax Act is they always take a mathematical formula and convert it into letters. So we have A minus B minus C plus D, which is basically A is the eligible subsidy per employee, maxed out at $847 per week, minus B, which is the 10% temporary wage subsidy, which is eligible to be claimed, and I'll talk a little bit more about that in a sec. And C is all amounts received by an eligible employee for each week in the qualifying period as part of the work sharing program that Stephen spoke about. So A minus B minus C is intended to restrict the subsidy to 75%, but if you've already got the 10% temporary wage subsidy or qualify for it, you can't get both. So it's really designed to prevent a doubling up of wage subsidies. And then D is an interesting add-on. It's the ability to, and again, it's employer CPP, the typo is mine, and employer EI, employer portion of those withholdings can be refunded if employees who are on the wage subsidy are being paid, but they're not doing any work for the employers. The term in the legislation is furloughed or sent home with pay. The employer CPP and employer EI can be rebated in addition to the subsidy. Talk about the 3 4-week periods. Well, they're broken into periods 1, which is March 15th to April 11th. Period 2 is April 12th to May 9th. And period 3 is May 10th to June 6th. So these are the periods for which you have to demonstrate a revenue reduction. The first required reduction in period 1 is only 15%. And the rationale behind that was a lot of businesses did not see a precipitous drop in their revenue until after the announcements and the businesses were shut down about the 18th of March. So the qualification for this program is you must be able to demonstrate, at least in the first period, a 15% decline in revenue when compared to last year, or the average of January and February revenue 2020. After period 1, the second period, you have to demonstrate a 30% reduction in revenue, or in the third period, a 30% reduction in revenue. Although when we got the actual legislation, it had a bit of a deeming rule, which was quite beneficial, which was to say that once an employer was found to be eligible for a specific period, for example, if you were able to demonstrate a 15% loss in period 1, then you were automatically qualified for the next period, even if you didn't just demonstrate a 30% loss in revenue in period 2. However, you still need to demonstrate that 30% loss in period 3, or you would not be entitled to the last tranche on the subsidy. So there's a whole host of records that you need to maintain to demonstrate your eligibility for the subsidy. You need to have monthly financial statements showing a revenue reduction, whether that revenue reduction be from March 2020 when compared to March 2019, or April 2020 to April 2019, or May 2020 to May 2019, or the average of January, February 2020. So you have the choice. Now, in order to calculate gross revenues, we have to know, well, what is included in gross revenues to show this 15 or 30% revenue loss? So the legislation says it's revenue from ordinary activities carried on in Canada and earned from, importantly, arm's length sources. So revenue from related parties, a corporation that transacts with a sister company, the revenue from that sister company would not be counted in the revenue because it's a non-arm's length source. So there is a fair bit of complexity when you're applying for this subsidy if you have multiple corporations in a related, or the income tax term is affiliated group. So revenue is also calculated using the employer's normal accounting practices and would exclude revenues from extraordinary items and from amounts on account of capital. So a significant sale of capital assets, which was used to fund the business going into this downturn, would not affect the revenue, the revenue showing the 30% or 15% reduction. Interestingly, applicants can actually choose either to do the accrual method, which is your standard accounting method for businesses other than farms, or they can use the cash method, and they have to make an election as to which method would actually give them a better revenue reduction. But if you make the election, for example, to use the cash method, you have to use that method for the entire duration of the program. So, and I'll get to this this thought process in a minute, but really the takeaway is there's a number of elections and options that present themselves throughout this program, and you're entitled to actually wait to make application on this program until September 30th, by which time you'll be able to have evaluated all of the various elections that you could have made to maximize or otherwise maximize your eligibility under the program. But there's this two schools of thought. One is, I want to apply right away because I need the cash. Well, in that instance, considering what these varying options might look like, particularly if you're concerned about not qualifying at some later point in the program, there is some argument that would be to pause and make sure your numbers are all lined up. The other interesting thing in this program, when we talk about a 15% loss in revenue or a 30% loss in revenue, it has to be 15% or more. If you calculate to a 14.98% reduction in revenue year over year, you will not qualify. It has to be 15% or nothing, 15% or more. So for nonprofits and charities, the question, of course, is, well, what revenue do you use to test? Well, and in this case, you include revenue from related businesses, i.e. operating a gift shop, amounts received from ordinary activities, but not-for-profits and charities have the ability to elect whether to include revenue from government grants and sources. And again, if they make the election to include or exclude government sources, they have to be consistent throughout the rest of the program. And of course, because this is a government subsidy, employers are going to have to maintain records to demonstrate both the arm's length wages and the arm's length revenue. And this is critical because there will be audits of this information, both prior to the payment of the initial claims, but then subsequent when the government is going back to make sure that eligible employers are claiming the right subsidy. So on the revenue tests, again, I talk about, normally the test is March, April, or May 2020 as compared to the equivalent month in 2019. Or again, you have the ability to elect to use the average of January and February 2020 if that gives you a better result. Now, this is also applicable if the business wasn't carried on in March 2019 because it's a new business, then the entity must use the January, February 2020 average revenue as their reference period. So when we talk about eligible remuneration, the amount that you put in the box to say, does this get up to the 58,700 for which I will get 75% subsidy, it includes obviously salary, wages, or commissions. It must be paid in respect of the week. So that doesn't mean that it has to be paid during the week, but it has to be paid as part of the remuneration for the week. So if a bonus was accrued in 2019, for example, but paid on March 18th, that bonus amount would not count as eligible remuneration because the bonus was in respect of work that was done in 2019. So the amount has to be paid in order to be eligible for the subsidy, but that payment can be any time from March 15th, 2020 to June 6th, 2020. So eligible remuneration doesn't include anything that might be repaid. So a loan will not count as eligible remuneration. And there are some tests, particularly if the employees are related to the business, related to the owner manager. There's a test which, instead of pre-crisis wage, they now have a term called baseline remuneration. And if remuneration falls below baseline after the subsidy period, there could be some adjustments on the eligible remuneration test as well. And the takeaway is you can't artificially increase wages during the crisis period in order to maximize the subsidy. And there's a whole host of other anti-avoidance and penalty provisions as well. Well, and as Stephen had said at the outset, applications were started on Monday, and there were some 40,000 businesses that had applied on Monday. The application is done electronically through the My Business Account portal, which is on the CRA website. There was a lot of clients that we had experience with that hadn't gone in and registered themselves under the My Business Account. And in those clients' case, we as authorized representatives can apply for them. So there was some tweaking to some of the verbiage on the application, because part of the application says that the person making the application had to certify that all the information on the application was true and correct. The government actually, in response to concerns from the authorized representatives saying, look, we cannot certify something that we haven't done all of the background on. So they've relaxed that rule for representatives. So it is now easier for representatives to apply for clients. And as I said a second ago, even though you can apply today, and if you apply today, there's an expectation that you can get payment within 10 days, or certainly by the end of May, not end of May, end of the first week in May. You can also defer making application of this program till September 30th. And why you might do that is so that you can evaluate on a more timely basis what would be the correct elections to make, whether to use the cash method or the accrual method, whether if you've got non-arm's length sales, whether you can elect to file on a consolidated basis. There's a host of elections that make it fairly complicated to just unilaterally say, well, I'm just going to apply today. And the reason why we say that maybe sometimes delaying might make sense is you're only allowed to apply once. If you apply and then you realize that there was an election that would have been more beneficial for you, you don't get to go back. So it's a one and done. Also, when you're applying for it, someone has to make an attestation, and that's typically the owner manager, or in a larger business, a chief financial officer or someone of senior authority, and they have to make this attestation that everything that's included in the application is true and correct, because you're applying for government money, and if the application turns out to be incorrect, the employer, the company, is required to repay the subsidy, but the person who made that attestation might also be on the hook for penalties as well. So again, I mentioned if they've applied for a subsidy and it's subsequently determined that they didn't qualify, they didn't meet the revenue reduction, they weren't paying eligible employees, the amount of the eligible employee payment was incorrect, the repayment is potentially 100% of the subsidy that was received, which could be a significant amount of cash. It doesn't take very long if you have a number of employees where you're getting $10,000 per employee for it to be hundreds of thousands of dollars of repayment. Layered on top of that, if it's subsequently determined that there was some abuse, some ability to artificially reduce revenue by not invoicing, some other transactions that were undertaken to qualify for the subsidy, there's there's a 25% penalty over and above the repayment of the 100% of the wage subsidy. So this could be a significant cash flow hurt to someone who's found to have made an incorrect and potentially abusive claim. And similar with government programs, there's also the potential for fines, imprisonment, and unique to this program, there's a provision that allows the Minister of Finance to disclose anyone who applies under this program, and potentially anyone who applies and is found to have manipulated the program unfairly. So the takeaway really, from a planning perspective, is this isn't one you want to look for loopholes and try and qualify. The spirit of this program is for emergency relief, and any misuse of the program is going to be dealt with, at least from all the publications that have been produced. Misuse of this program will be addressed very harshly. So how does it integrate with other programs? With the 10% wage subsidy, as Stephen said, this is now coming to light how they intend this to work. So the 10% wage subsidy, which was the original announced program, was really only available to businesses that were eligible for the small business deduction. So that would mean that they had taxable capital of less than 50 million. And the application, there was no application for the 10% wage subsidy. All it was required was you reduced the amount that you remitted to the government with the payroll for the period under which the 10% subsidy was in play. Now, a lot of people may not have done those calculations, but they will have to now, because if you are eligible for the 10% wage subsidy, you have to calculate that subsidy and reduce the 10% amount from the 75% subsidy. So they are now meshed together. Similarly, with the Canadian Emergency Response Benefit, the CERB program, these are binary or intended to be binary programs. If someone is on CERB, they would not be eligible for the wage subsidy. And that's right in the definition of who's an eligible employee. So an employee who has not been remunerated for 14 consecutive days in a claim period is not an eligible employee for the wage subsidy for that 4-week period. Well, the person who's not been remunerated for 14 consecutive days, as Ina will speak to in a minute, is eligible for CERB. So they're trying to differentiate. Someone who's eligible for the wage subsidy cannot be eligible for CERB. However, under the wage subsidy program, an employer can rehire and retroactively pay employees back to March 15th. So if they rehired an employee who they had laid off on March 15th, and the employee had made a claim for CERB, and then subsequently also got payroll for the period from March 15th to say March 31st, the employee has the onus to repay the CERB. This is unique in the sense that the employer rehires the employee, doesn't really have to check whether they claimed CERB or not. If they pay them retroactively, the employee is responsible to repay the CERB benefit, the $2,000 for the month. And again, it's employers who are not eligible for this subsidy could still be able to lay off their employees or furlough employees, and then they would be eligible for the CERB. The intent, of course, though, is that they're trying to retain employees tied to employers, and that's why the wage subsidy program is so much a larger program than the CERB. So I talked about the temporary wage subsidy really is now also a component of the emergency wage subsidy. This is the 10% program. And again, you needed to be a Canadian-controlled private corp with an allocation of the small business limit, which means you had to be able to claim at least $1 of the $500,000 small business limit. And if you were a company within an associated group, every company would be eligible for this unless the group had more than $15 million of retained earnings and capital. So the calculation of this subsidy is 10% of wages paid between March 18th and June 19th. And the maximum subsidy was up to $1,375 per employee to a maximum of $25,000 for the employer. And again, there's no application for it. It was just a calculation, which then you could use that calculation to reduce the remittances of tax to the government. So it's sort of a, I skipped ahead one. This program, while a lot of people looked at it and then said, no, I prefer to take the 75% wage subsidy, they now actually have to go through the exercise of calculating this program. And if they don't remit or reduce payroll remittances, they can actually apply for a check so that they would qualify. And the must for this subsidy, as well as for the Canadian emergency wage subsidy, is that they must have had a payroll account as of March 18th, 2020. Otherwise, they weren't considered an eligible employer at that time. So that's going to cover it for me for the temporary wage subsidy, and I'll just turn it over to Ina, who can speak to the CERB and some of the other programs.
Thanks, Graham. Can you hear me okay?
I can hear you.
Okay, perfect. Okay, so just going to go through some of the other programs that are available. The first one is the Canadian Emergency Response Benefit. And as Stephen had talked about before, this is a temporary income support for people who have stopped working. So if they've been laid off, or not working for the more than 14 consecutive days, they can apply for this. So they have no income, employment income or self-employment income because of COVID, and not earning more than $1,000 per month. So, in order to apply for this and qualify, they have to have earned at least $5,000 from employment, self-employment, EI in 2019, or for the 12-month period ending at the time that they actually apply for it. So maybe you didn't have income in 2019, but you do, say in 2020, before COVID happened, of $5,000 or more, you can apply for this benefit. You have to be a Canadian resident and age 15 at the time as well. So in order to receive this, it's a 16-week maximum benefit, so it would equate to $8,000 in total, and it's an en bloc of 4-week application. So the application started March 15th of 2020, and it'll go all the way to October 3rd of 2020. So I know I've applied for this for a few people and helped them out. So original application, just the way things worked out, they could get their $2,000 from the March 3rd or 15th payment to April 11th, and then they could apply right away for April 12th going on to May 9th. But I guess the key is that it is maximum of $8,000 for that application. So you do have to do this online with the CRA, or you can do it over the phone as well. I think the easiest way to do it is with My Account. Pretty easy to set up My Account. Once you've done it, you can do it directly through CRA My Account. They have to mail actual code to you, so that takes a while, about 10 business days to get that mailed to you, or you can go through Service Canada to link you up to My Account with the CRA to apply for that. Okay, so this is for people who have stopped working, and as Stephen had said, you have ceased working, so you can't have quit your job. You actually have to be laid off for at least 14 consecutive days within that 4-week period that I talked about from March to October. And the individual does not receive greater than $1,000 of income from employment, self-employment. And I know there was questions on self-employment income where it was around whether it's gross income or net income. I believe it is net income on the self-employment income. EI benefits or allowances under maternity programs as well. So less than $1,000 is what you have to receive. And I think the $1,000 you can, and I don't know exactly, and maybe Stephen, you know more on this as far as, if you have been laid off, but you are maybe working a couple days with earning less than $1,000, if you can still qualify. Like, to me, they say you cease working, but you have to have received less than $1,000. That's kind of confusing.
Yeah, so they've clarified kind of, but to say that yes, you can actually access both programs if your employer is accessing the wage subsidy and you are working under, you're earning it less than $1,000. So the short answer is yes, they both work. I think it was just a math oversight and it was a little left hand, right hand for the government. So the CRA confirmed that on a call yesterday.
Okay. Good news. Kate, you want to switch, Graham? So question is, and I know being a business owner myself, not in my capacity here at MNP, but owning a pub in town, question was, what's better from the employee's standpoint once they've been laid off? Do they apply for CERB? Do they collect EI? And in the beginning, is it taxable? Is it not taxable? But the CERB is taxable. And there is nothing deducted at the source. So come tax time next year, they will issue a T4 for this amount that's been issued, and it will be taxable at that time. So depending on how much other income individuals have during the year will determine if they have to pay tax on that amount. We talked about whether you can have other income. It has to be less than $1,000 during the 4-week period while you're receiving the CERB. If you've applied for that payment and you have direct deposit, I've seen payments that come in within 2 to 3 business days. If you don't have direct deposit, it takes about 10 days for them to mail a check to you. And so for EI, if you're currently on EI and that EI stops before the application period ends, so October 3rd of 2020, if there's a delay there, so let's say end of June, that EI comes up, then you can still qualify for the CERB for the next period up until October 3rd. Okay. If we go on to the Canada Emergency Business Account, so this is an interest-free loan of up to $40,000 for small businesses and not-for-profits. This is administered through a business's main bank. So if they have their main, say, checking accounts with ATB or RBC or TD, whoever it is, that's where they would apply. In order to qualify for that, you have to have at least $20,000 of payroll and not more than $1.5 million of payroll for 2019. This loan, if you repay it by December 31st of 2020, as Stephen has said, you can get 25% forgiven. Now, I know we've had some people ask, well, can I apply for this and then repay it right away and then gain access to that $10,000 of being forgiven? And my caution is I would not recommend doing that. The purpose of this loan is for cash flow needs. So if you're in a position to repay it immediately, I would say you're not in a cash flow crunch that you're requiring this loan. So that is a proceed with caution if you're doing that. If you haven't paid it after December 31st, 2020, then it will be subject to a 5% interest rate on repayment. And those funds cannot be used for management remunerations, paying dividends, repaying existing loans. Maybe there's credit cards you want to pay off, things like that. That's not their intention. It's really for non-deferrable expenses such as payroll, rent, utilities, insurance, regular debt payments, and property taxes. And when you do apply for that, you have to sign a waiver, essentially, that here's the things that you're going to use this for, and yes, this application is true. Okay, the other ones are the Export Development Canada and the Business Development Canada Working Capital Loan. So this was a program where they've given $10 billion of working capitals to small businesses and medium-sized businesses that qualify. This is administered through BDC and EDC, and it's a little bit different than the next one with the co-lending, but they are requiring information to make sure that you do actually qualify for the loan based on your past history. So you need 3 years of prepared financial statements by an accountant, interim statements if they're greater than 3 months old, and then do an expected monthly cash flow as well for the next 6 months with how your business has been impacted by COVID. The next one, the co-lending program, and when I go on to their sites too, this is the one that does come up with them. But they've set aside $40 billion for this, and they're going to give a maximum credit of 6.25 million, and I'll go through how they're working that out. But basically 80% of the loans that are given are funded or backed by BDC, with the 20% coming from your regular existing financial institution. And you can make application directly through your existing bank. And again, these are not to be used for dividend payout, shareholder loans. It is to be used for operating expenses during at that time. So how they're going to give it out: if revenue is less than $1 million, you have the opportunity to get about $312,000 of loan. If your revenue is from $1 million to $50 million, it'll go up to 3.125. And then if your revenue is in excess of $50 million, they will have the opportunity to loan you $6.25 million. So for the first 12 months, it's interest only, and then they will work out a 10-year repayment period for that loan. So the latest one that's just been released is the Canada Emergency Commercial Rent Assistance. And going back to being a business owner, this was my first question of, okay, the banks are coming out with mortgage assistance for those that own, but what about those that rent? What's going to happen to them? Because their businesses may be closed and they still have to pay rental payments, but they don't have any income coming in to pay for this. So this is a rental assistance program for small businesses, where it'll lower their rent if the landlord agrees to lower their rent by 75%, then the owner can qualify for 50% of the monthly rent payments for eligible small business tenants. So an eligible small business tenant would be somebody that's paying less than $50,000 a month in rent and ceased operations, or who have experienced a 70% drop in their pre-COVID revenues. And I think there's been some talk on that 70% drop and kind of relaxing that. I don't know, Stephen, if you've heard more on that regarding the rental assistance.
So they actually, probably about an hour ago, I think the Canada Mortgage Housing Corporation has put up an updated FAQ. They haven't spoken to the threshold, the 70% threshold decreasing. They seem reasonably committed to that, but they have provided some additional eligibility for requirements for businesses, and just as sort of how to apply what will be required. So I can put that link in the chat if people want to check it out. But it seems like the revenue decline will stay where it is.
Okay, great. So if the landlord agrees on reducing the rent, then the loans will be forgiven to the actual landlord for those amounts. So, but there is definitely going to be some requirements. They're not going to evict the landlord, things like that. So definitely a great program, and should be operational mid-May. And there's more information coming out all the time. So it's one of those things that we'll have to continue to watch. So options to keep employees during this time, Graham had gone over the emergency wage subsidy programs. So that's the 75% and the 10%. Work share agreements. So they have expanded on this. This has been in place for quite a long time, work share, but they've extended eligibility for this. So they've extended it from 38 weeks to 76 weeks. Before you could enter into the program after 2 years of operation. They've changed that to your first year of operation. You do have to submit an application prior to starting this program in order to qualify. And there are a number of rules around if you qualify or not. So you have to have at least 2 people in the work share arrangement. It can't be the owner manager that's part of that. It has to be really core staff that have reduced their working hours because of the situation that's going on right now. There's also supplementary EI. So employers can top up their employees on top of their EI benefits so that they're not getting clawed back on the EI, but they must register this with Service Canada as well. And then there's temporary layoffs. So in the beginning, in Alberta, it was a 60-day layoff, temporary layoff that you could do. And they did extend that to 120 days, but you still have to pay the health, dental, and other benefits as well in order to qualify for this. So this really just ensures that they can keep their job, qualify for some of these other programs, and then have a job to come back to once things get back to some normalcy. So I think with that, Graham, if you wanted to go over some of the planning opportunities.
Turn my mic back on.
Yep.
Okay. Don't know if it's working with this or not, but
yep.
So what happens when we get through this? Ideally, businesses take these cash flow and cash preservation opportunities that are presented to them so that they can, come out the other side and still have a viable going concern business. So what are some of the options that are available to them or planning ideas that they should consider? So first of all, estate freeze. Essentially, when we talk about an estate freeze, what we're talking about doing is freezing the existing value of a business in the hands of usually the founding generation, mom and dad, and then allowing future growth of that business to accrue either to their kids or potentially to employees who are coming in to purchase the business. And from an estate freeze standpoint, what we're about is the fair market value of the corporation at the time of the freeze, because that sets the value of the shares that mom and dad will hold and potentially hold up to their passing. And on death, those shares will be deemed to be disposed of at fair market value. So if we're going to freeze our business in favor of our kids, and we wanted to also mitigate the estate tax liability that would be potentially payable to us down the road, post COVID-19 pandemic, the value of the business would likely be somewhat adversely impacted by all of this negative cash flow and difficulties that have been experienced. Unless, of course, your business is the manufacturer of ventilators or personal protective equipment, I'm fairly certain most businesses' value will have dropped. So freezing at a lower value effectively locks in a lower value for tax on death. Similarly, if someone has already done an estate freeze and they're now holding preferred shares when it was frozen in 2016 for $5 million, and now the business, if they evaluate it today, is only worth $2 million, they're still stuck with the shares that have an earmarked accrued tax liability of $5 million, even though the underlying business is not worth that anymore. So an estate thaw is basically undoing the freeze and refreezing at the lower value, again with the view to mitigate the estate tax at the end of the day. Certainly, we always recommend to our clients that they should review their remuneration strategies. Certainly, salary versus dividends, as an example, if you've followed a precept, going back many years, say prior to 2006, where it was always a good idea to bonus all of your income out of the corporation if it exceeded the $500,000 business limit. That may not be as sound a policy, particularly if now the business suffers a loss and you've paid tax on a bonus. Let's say the business earned last year $1.5 million. You declared a bonus of $1 million to get your business income down to $500,000. That $1 million bonus has a tax liability on it of $480,000. And if in 2020 the business actually loses $1 million, that loss cannot be carried back against the prior year's income. So there's a certain amount of, hindsight is 2020, but with situations like this, which are unexpected, it may now be, prudent to look at, some of those long-held beliefs. Do you bonus down, or do you just pay tax in a year that you've earned income, and then if you have a loss in a subsequent year, that loss can then be used to carry back against high tax income. With the markets, they suffered a tremendous drop when all of this started towards the early part of March. They've slowly been clawing back, but a lot of investors' portfolios are substantially lower, and possibly triggering capital losses on those portfolios is not a bad idea. There was some new rules introduced with passive investments within a corporation actually having an adverse impact on the ability to claim the small business deduction. So triggering losses by disposing of those investments and distributing those investments out at the lower value that we're facing today and distributing them out to the shareholder might make sense to both eliminate the passive investments in the corporation and to take those investments out at a lower value with the expectation that growth will happen. Now, if we do trigger capital losses, selling shares, for instance, if you're selling shares in ConocoPhillips as an oil and gas corporation that's had a bit of a pounding with the price of oil now at $10 a barrel, if you sell and trigger a loss in your corporation, but then immediately turn around personally and buy ConocoPhillips shares again, that loss will be denied in the corporation because it's called a superficial loss. So that's where we advise, look, the entire sector, whether it be ConocoPhillips or Royal Dutch Shell or Suncor or CNRL, all of those entities have suffered because of a drop in the energy market. So if you sell one specific share of a company, buy a different company in the same sector so that you don't suffer the superficial loss rules. The other idea, which is going back and seeing whether the corporation has had capital gains on investments prior to all of this happening, and might well be a good idea to pay out those, what's a capital dividend, which is the non-taxable portion of a capital gain realized in a corporation, paying that out of the capital dividend account before these new losses are realized, because losses realized after the gains were previously realized, those losses will grind the ability to strip tax-free funds out of a company. There's certainly, as I said, transfer of property from a corporation to an individual shareholder. If the value is low, that's the test that the government looks at. What's the value of the property you're taking out of the company? So, for investment portfolios or for even real property that's sitting in a corporation, if the real property value has declined precipitously as a consequence of the uncertainty in the economy right now, possibly that's not a bad time to take it out of the corporation, because that's the price, the fair market value as of the day you extract that property is the price you're going to pay tax on. And lastly, asset protection planning is always a good idea. We're coming out of some fairly difficult times, and we don't know what things might look like going ahead. So you might want to secure your assets. For instance, if you in your business, you've also been fortunate enough to accumulate enough equity to buy your land and building, maybe moving land and building into a separate company and securing that and separating it from the business risks of your business operation might make sense to do that now. So there's a whole bunch of value-driven planning that we can look at, because values are lower than they have been historically, and sometimes that's an advantage. So that's really the tax planning opportunity that presents itself. With that, Reg, did we have some questions that we want to tackle?
Great, thank you very much, Steve, Graham, and I know that was some really fantastic information. We did have a question in the chat from Kim Fox, and I believe it was in reference to the CERB. And Kim, feel free to chip in. But she said, if you haven't been laid off but require to be off because of childcare, could you be eligible in a case like that?
Well, with the CERB, and I'm just going to my notes. And my takeaway is that, for the CERB, you had to be stopped work or without employment or self-employment income for reasons related to COVID-19.
Okay.
So reasons related to COVID-19 might be that childcare has ceased, so you would then have an argument to claim CERB. Stephen, I don't know if that jives with your belief, but
yeah, I think it is a little bit of a gray area. I mean, generally speaking, when the government gets asked if somebody should or shouldn't apply for CERB, they tend to lean towards apply for it. So I would read it the same way as Grant. Like it says stop working due to COVID. So I think there's a claim there, but
the question being is that you reiterated a couple times that you had to be laid off to collect, or it would be up to the employee to be responsible for paying that back. And I have clients that have asked those questions, so yeah. I'm really curious.
Yeah. So and on that, what we most mean is you can't quit your job to get CERB. Is essentially the spirit of it that they're trying to hold on to. So. That said, the CERB application process is super smooth and quite easy. So if somebody applies for it, they will likely get it. There's very few circumstances where they won't get it. But if they showed that they were earning an income or should have been earning an income during that period, who knows what tax season looks like next year? But there is the chance that they'd have to pay that back. So there would be a caution. But if somebody has been isn't receiving any income, that makes it quite a bit easier. But no, you really aren't supposed to have quit your job to access it.
And again, it comes down to, I think, the question of voluntarily. If there's no solution or no available childcare because the childcare spaces have been closed as a non-essential service, then I think you do have a pretty compelling argument that, due to COVID-19, you could no longer continue to work.
It also becomes a problem with our families, with individuals with special needs, as the care workers are limited to coming and going in and out of their homes. And a lot of these kids require 24/7 care. So it's another one of those situations where families are basically being told, back away and you'll have to find natural supports being that of family. So just curious on how that's affecting that, or if you've run into that yet.
Yeah, no, and it's definitely something that is in front of the federal government. It was a big topic of conversation last time they met in Ottawa. And I have to admit, I haven't watched it yet today to see if that question's come up again. But you saw the minister responsible, Carla Qualtrough, commit to Parliament to kind of come back and keep looking at this and making sure folks aren't falling through the cracks on it, knowing right now that there are. The other thing maybe I would say to this too is, there's one of the things that the government's trying to wrestle with, and it's not a perfect science, so it's not going to work perfectly, but trying to keep the programs for the intentions of that program and not turn one program into like a big Franken program where they tack additional program measures on top of it, and it becomes extremely convoluted. You've seen them kind of dip their toes into it at times. So I wouldn't be surprised if you saw other supports. And not speaking on behalf of the government, but I think one of the things they would point to is the amount of money that they've put into other nonprofits and stuff like that to try and address some of these challenges too. That said, I think if you were to ask the federal government, again, not to speak for them, if you should or shouldn't apply, they would encourage you to apply.
Well, and just to add to that, Stephen, if you go under the frequently asked questions for this CERB, it is available, to those who have stopped working. So yes, a layoff qualifies, but if you have stopped working for reasons related to COVID, and they talk about if you're quarantined or sick, or you're taking care of others because they are quarantined or sick, or you're taking care of children or other dependents because childcare is closed. So in that case, yes, maybe you had to stop working. You didn't actually get a layoff, but you would still qualify, for the CERB.
Great, thank you very much. Were there any other questions? Please feel free to unmute and go ahead and ask.
I have another one. One of the questions I have as a small business owner or proprietor, I'm a realtor. So we've always managed our books and kept everything in order without running a secondary business account, unnecessary charges. Everything is up to date. Payroll accounts are up to date. I have staff members that are paid. We looked at that $40,000 Canadian emergency loan. And we were unable to qualify for it because we did not hold a business bank account prior to March 1st. Is that accurate? Even though all of the other business accounts are open, set, payrolls up to date, all of that?
So is it an account in your name solely and not, whatever realtor?
No, it's just personal.
Your personal name. I guess that's a question for the bank that I would go back to them, because you're self-employed from that perspective, and I'm pretty sure, I'm just going to go back to it's for small businesses. I guess that's the question. If for self-employed businesses, if they're looking at corporate businesses, like incorporated businesses.
They need a payroll account, and
we
that's
have
the one.
Payroll account and all of that, but they basically said if we didn't have that account open, a business account open before March 1st, we didn't qualify.
Interesting.
Yeah, because that's not part of the preconditions in the program that I have.
We couldn't see that either in anything on CRA. So I was curious if you've run across that with any of your other clients. That was a CIBC bank that turned that away.
Have you talked to them directly as far as that being the reason why you didn't qualify?
Yeah.
Okay.
That was exactly, it was a March 1st business bank account. It was a requirement, but we can't find that anywhere on the CRA site. So I wondered if you'd run into it with any of your other individuals or proprietors.
Well, I know with the application itself, they make you verify, in there, here's the requirements, and I know it's not on CRA's site, but they do indicate the borrower has an active business checking operating account with the lender. But whether that has to be specified under them as a business account, because my guess is yours is just an individual account and not set up as a business account under their with the bank. So
Correct.
So from there, I mean, that's a question to the bank is, okay, it's treated like a business account, maybe though it's not specified a business account with them, that you should still qualify. Like, to me, that doesn't make sense. I would go back to the bank with them, the bank on that.
Thanks.
Great. Any other questions for our presenters? Going once, twice, three times. All right. On behalf of the Red Deer and District Chamber of Commerce, thank you very much to the folks from MNP for this great presentation. It's been incredibly informative. They're definitely, as was mentioned, they're very complicated programs rolled out in a very quick time. So this is really some invaluable information. MNP has shared that the presentation will be made available. So if you would like a copy, please email myself or Shelley here at the Chamber. So everyone knows, next Thursday we are hosting another webinar. This one will be on the pandemic edition of a marketing strategy. So registration and details can be found on our website. So once again, thank you for tuning in. Thank you to MNP, and I hope everyone has a great afternoon.
Well, thanks, Reg.
Thank you.